Hi guys, welcome to the Saving Money Show with me, your host Sean. Now, I hope you all had a happy Christmas, Hanukkah, Kwanzaa, whatever you celebrate, and I hope you have a great new year. Now, we're going to go through some tech stocks, and I've used the per earnings growth to check it out, and we're going to have two surprises at the end where I haven't used per earnings growth. I've used my usual methods. Now we have the likes of Apple, were usually about 34 PE, and when you consider they was 15 to 20 last year, seems overpriced. But then you look at their growth of 14, that brings it down to 2.73 as a per earnings growth metric. So it doesn't seem so overvalued. But then we've got to compare it to what their per earnings growth was last year and previous years. So that's how I've worked them out. I've also looked at other factors as well, but that's the first factor I looked at. Some of these per earnings growth are between 0.67 to 2.73. Apple is not in there because I think that would be a cop out. The first one is Zoom Info Technologies. I've spoke about it before. When I did it was down here actually. I didn't pick it up. And if you remember, I spoke about how the IPO was delayed because it was getting confused with Zoom. People were going into this instead of Zoom video. So the thing is, there are a few Zooms on that are listed, and there's one of them with like a couple of 100 million market cap, and that one as well had its IPO delayed earlier in the year as well. This one has been awarded 3 honours. Its per earnings growth was, as you'll see, is just over 2, and where is it? It says 3.45, but it should be 2.65 if you work it out yourself. Yahoo Finance sometimes, with these ones that aren't as popular, it doesn't update so quickly. Now, I think it's one to look at. That doesn't mean it's one to go and buy, one to look at. Same as CACI. Now, CACI, I think is, you see the PE ratio is 18. So if you're someone who wants to look at PE ratios, this year I haven't looked at PE ratios, and because I felt it's been a bit misleading. The price to book is 2.2, but you know, Splunk, and you can see with Splunk that it's we all know who Splunk is, and I think with cyber software that it's cyber software is one that's going to grow after the hacking, and I think it's done well this year, so you've got to be careful. It's an investor class action, but there always is with successful companies. I prefer CrowdStrike as a cybersecurity company, but if you already have CrowdStrike, then Splunk. To you. No, the thing is, again, on your finance, the peg isn't shown properly. But the thing is, I think I do own this, and I do think this is one that's going to grow next year. I don't think it's grown as much as it should have done, sorry. And I do think it's one that's going to grow. We have NetApp. Now, I did a video when it was around here. Now, I understand a few of you probably sold out, getting bored, waiting. I myself have sold out there, but I've done a review of it, and I've realised my mistake. I thought I was at highs, made my money, but I do think that it will go higher, but it needs more. It needs more, how do I put it, investigation. Yelp, this is one I think, of course, advertising revenue has gone down because of everything that's coming. I said beginning of it that advertising revenue would be the first thing to be hit, and it was. However, I still think that this is one that the analysts are underestimating. I think it's one that is really a good company for the future. I think you're not overpaying for it. It had a jump up and now it's had a pullback. I think if you can get it for $25 or below, then snap it up. People are expecting me to put Dropbox and the ones I usually do in. I'm not going to do that. Now, this is one that's obviously one of the two is Baba. I said previously, if it hits 220, it hit 220. It went. You see there, it hit 220. It went down to 212, and then went back up again, and it came back down. And I do think if it hits 220, I do think if you want to pick it up here, fine. Reason why is because Chinese government are investigating it over monopoly. This is what makes me laugh. These people are the ones who signed off on it when it came to them acquiring these companies. They actually backed them. And now, so it's like the Americans are holding antitrust probes, so we've got to hold one ourselves. Yeah. And of course, Salesforce, the 220 mark. You know, I do think it's not going to take much for Salesforce to jump up, and I do think Salesforce are looking into acquiring more companies. Now, there is one other, Amazon. I've been trading Amazon like a beast. When it hits below 3,000, I've been picking it up. When it hits 3,400, I've been selling and been doing it back and forth. I do think it's gonna skyrocket next year. It has these periods where it does nothing and then it skyrockets. It makes up all that lost ground. A bit like Google. I do think this is gonna do well. Anyway, I'll see you.